Hi guys, just a quick reminder that the algorithm that I use in this video that I go over my investing analysis with, just a reminder that it is free to use. The WAP is down in the description below. We've got a bunch of education that you can watch to fully understand of how the algorithm works, the back test of it, and all that kind of jazz. So if you do want access to the algorithm, it is free. There's no catch to it. I'm just sharing what I do because I love what I do. So yeah, guys, that's all. Hope you enjoy the rest of the investing analysis. Hello, everyone. Welcome to another episode of Investing and Analysis by me, Patrick. Now, it's been a while. It's been a good few months, actually. The truth is, I've just been busy doing other things. I know I've made that excuse for quite a long time now, but honestly, it's just the truth. The amount of time I have time to be making videos is just not there at the moment. But of course, I'll get them. I'll try and upload and get them out when I can. So yeah, without any further ado, let's get into it. So overview for investing analysis. We're just going to go over the signals and algorithms. We're going to go over macro analysis. Go over the perpetual futures data to see what all the day traders are doing. And then finally, we'll end with a bit of news. I do want to make this clear too. If you have any questions about anything I do or my strategies or whatever, please feel free to drop them in the comments and I'll reply to them in the next investing analysis when I do that. So yeah, well, anyway, without further ado, let's get into it. So first thing I'll do, get rid of this. So taking a look at the algorithm, we currently have no new signals as of now. We have obviously just been accumulating throughout this zone over here. And my main bias throughout the medium term would basically look kind of something like this, where we have this, push down, consolidate, and then from here, go up like that. And then, the market will go and do its thing. That is my kind of base case at the moment for the medium term. So that's between 6 to 12 months. In the short term, it's a different story, but that's to be explained within the perp data analysis bit. Now, maybe asking yourself, well, why do I think that within the medium term? Well, main reason is due to this, which is my FedNet liquidity fair value model, which basically represents where the fair value price of Bitcoin should be, based upon FedNet liquidity, because it is the number one driver of Bitcoin's price. And as you can see, it's worked pretty well for identifying where the fair value price is, because the Bitcoin price always ends up just going straight back to it like an elastic band. So like back over here, we basically pushed down at a very quite high volatile rate, but then obviously we got price rebound touching over here, and then obviously we had it crash quite hard, very volatile, but then eventually the price came back to it like an elastic band or a magnet, as you can call it. But my fair value zone has worked really well for identifying tops and bottoms. We're not bottoms, but like around areas where price should be going towards, if that makes sense. So yeah, I do believe that we will probably touch somewhere around about 92,000 throughout the medium term. Short term, I don't think we're going to get there, unless I am wrong. Tomorrow Bitcoin just does this, which if it does that, then I'm just going to kill myself. But I very much doubt that. But yeah, now for the main reason why I still think we are going to consolidate lower is because number one of the quantile model that I have on, which is a regression on Bitcoin on a logarithmic chart, which is basically telling us like where we could expect Bitcoin to go into the future. Matter of fact, I'll actually get it on a different one. Quant, yeah, that's the one. So this is when it's projected out into the future, which I assume, if we're going to be assuming that within this 4 year cycle kind of frame, if you believe it or not, let's just look forward 4 years. So what, we're in 2026. Yeah, so looking at about 2028 here, 29 even. So yeah, you're looking around about 200k maybe. But yeah, anyway, I'm getting distracted whilst talking about the quantile model. I do also believe that after us hitting this fair value zone, we're obviously going to go lower. Reason for it is because we still have Bitcoin's realized price below current price, which if you look throughout all the past cycles that we've been in, the realized price has always been hit, more or less basically every single time. So and turn these off, and then turn on the hyperliquid dip buyer. Here we go. So in terms of hyperliquid, this is an algorithm that's been in the works that I've been working on for a bit. Um, it's hyperliquid is definitely losing momentum. Like, you can just whack on a few indicators such as like the RSI. I'll go over the rest of these indicators in a bit. But yeah, if you just whack on the RSI, you can whack on things like EMA, double EMA. No, sorry, not double EMA. EMA cross. EMA cross. Or like even the SMA, right? On the 21. Put that on the weekly even. And then with these, I don't know why these always put on so many. Yeah, you just do this on 12, do that 21. You can see that it is definitely losing momentum. Like, the price has turned bearish here. In terms of the weekly, we're obviously still bullish, but that's more like a medium term trend indicator. Obviously, the RSI, if you're using it via a trend following indicator, which is just, you have the midline here. Whenever this line goes below or this line goes below, you want to short or sell. Whenever it goes above, you obviously want to buy or long. So yeah, it's not looking too good on Hyperliquid. Now, obviously, this is an asset I do want to hold for a very long time. But yeah, it's just not looking the best of the best at the moment. Now, am I going to personally sell any yet at the moment? No, not really. Not at the moment yet. I would want to wait for a bit more confirmation on the technical side of all the trend indicators. But I mean, if you just look at the fundamentals behind Hyperliquid, it's just so good. It's an actual company. It makes actual revenue, actual profit. It's all the profits being put straight back into the token. They're buying up the asset as we speak. Like, it's just like, why would you wanna kind of fuck around with it? So yeah, I'm planning to hold this for a very long time. But of course, I have built an algorithm around it to be buying up positions, so on and so forth. So yeah, but at the moment we had a few sells. Personally, I didn't sell them, even though I probably should have. But yeah, that's the current position on Hyperliquid. Now, for the rest of the tokens, I did have a position in ton or gram. I decided to sell this week for a loss. Main reason being is I want to wait until we see actual real big movement from the Telegram team, because basically the whole thesis behind Gram is Telegram is currently a really big messaging platform, and they built their own token around it, and they're planning to do kind of the same thing that Hyperliquid has done. You know, build a real company, make real revenue, then push all that revenue and profit back into the token. They have announced that they do want to do it, but nothing has come about it yet. So I'm personally not going to touch this until I see something happen from the fundamental side, or if I just see the chart looking a bit more healthier, doing something a little bit like that. That's when I would personally want to be buying back into the token, because at the moment this is just very, very bearish. Like, you can just look on the RSI again, bearish as fuck. Any other tokens I want to talk about? Monero, I'm thinking about maybe accumulating this, as privacy is just going to get much more and more important as we go into the future, as crypto gets a lot more regulated. Lighter, this is something, this is a coin that I found a while ago. Personally, I'm not buying it yet. I want to wait until it crashes at least 60%, which I would then proceed to be buying it down here. And yeah, I think that's all the tokens and signals, so much to talk. Now, let's go and talk about macro for a second. So I've been taking a look at FedNet liquidity, which is this chart over here, which is very highly correlated to Bitcoin itself, because obviously what FedNet liquidity is, it's the federal government's balance sheets, and whenever you basically see this thing going up, it basically means that the government are pumping money into the markets, and whenever you see it going down, it basically means something bad, where they're basically taking money out of the markets. And you see the federal government are the ones that have the most money in the world. So this is something I've been paying very close attention to. Now, I kind of did an overlap on Bitcoin's price, and it is actually coming in confluence with my thesis of that we have FedNet liquidity. I need to actually whack on this thing here, whack on these, probably turn off that there, and turn off scale to Bitcoin. So yeah, as you can see, it is in confluence with it coming up close. But if you look for the rest of the year, it doesn't look that great in terms of Bitcoin's price. Now, of course, how this looks at the moment is fine, right? Like, if you look throughout like the 4-year cycles, right, you will actually note that they do actually go through like 3 different types of stages, which is, so after a bear market going into the first year of the bull market, you basically have the accumulation phase, which is this one over here. Then you have what's known as the blow off phase, which is this thing over here, where price begins to climb up and rise pretty rapidly. And then you have the final phase of the 4-year cycle, which is known as the distribution phase, where everyone who's made profit throughout here and here begins to sell their Bitcoin, which then causes the next bear market, right? And, you know, very perfect example was the bull market on Bitcoin we had over here, where we obviously came out of the bull market in 23 over here. So throughout 23, right, all of this was an accumulation zone where you would have just been buying as much Bitcoin as you can. And throughout the rest of here was basically just a blow off phase where Bitcoin just ran really hard, right? And then finally we had the distribution phase where Bitcoin sold off a bit, but then a lot of demand got sucked up here, which pushed the price higher. But then of course a lot of distribution happened, which then led the price lower again. So this is what Fed net liquidity looks like, and I like to see it as like a leading indicator for Bitcoin's price of where we could assume Bitcoin to go in the next 4 years. So I think overall it looks all right. Everyone's probably looking at this and being like, "Oh my God, Bitcoin's not even going to move in the next like 2 years." Like that's fine. Like you can just accumulate more because the fact is, like it would make sense for this asset to rise higher. Now, the only thing I don't agree with this FedNet liquidity and how I've kind of laid it out here is the fact that it doesn't come in confluence with my regression model. Because if you can actually see over here, like it just not nothing about this is within confluence, as I would say. Like even if I whack on like the other kind of flaws that we have, which were to represent the COVID crash, FTX crash, and so on and so forth. Once these come in and load. Yeah, there we are. Even with these, like flaws, if you would, um, it still doesn't. I mean, it kind of does. It kind of does. But again, these like this main part over here is based upon like real, actual quantitative data. This is just based upon just random crashes that happened. So it's not really that impactful. And if it is to actually just go like this, it would mean that it would break the quantile model, which would be a very bad thing. But I guess we'll just have to see how it goes because this could be the case, which if it is the case, then I guess I'll just be accumulating more via the algorithm, but if not, whatever. Um, yeah, that's really it for everything to do with the macro side. Um, I guess we'll get into the data now. So take a look at funding rate. Well, actually, first of all, taking a look at price just by itself at the moment. I just want to talk about like how good price is because I'm not being funny with you. Price is just being bought up like hell throughout here, and you'll actually see this within the data in a sec of just the amount of spot orders that are coming in. So yeah, it just looks absolutely phenomenal. And I'm not gonna lie to you, I kind of do want to put in a trade. It'll be a zero leverage trade, but only risking like 2% of my portfolio on it. But I would like to actually take a trend swing trade here. Probably enter in here, put like a pull out my stop loss. Probably a bit below 60k to be honest. Maybe somewhere like here. I say that is actually quite that is a lot to risk. But then obviously I would want to target if it loads, 92 where that FedNet liquidity kind of zone is over here, around about 92. So looking at around about 43% on that trade there, which if it does go well would be really nice. But I mean, I'm just not really a big fan of this risk. But I kind of guess we'll just have to see and how the market progresses, and you'll kind of understand why I want to take this trade when we get into the rest of the data analysis. But anyway, in terms of the RSI, we are in a positive trend. Taking a look at my funding rate I've built, it's pretty flat. I'll be honest with you. I bet you consider 14% pretty flat. I like to consider like anything above 15 to 20%. That's when funding rate is like begins to really get significant. just like it was kind of significant over here, which was kind of very interesting of that we had positive funding, but then it marked a bottom in price, which was very strange. I will never understand that. Taking a look at funding for Hyperliquid, it's basically the same story, still very, very flat. I'm taking a look at my stablecoin mean reversion indicator. It is actually identifying that we are in a positive trend and stable coins are being sold into assets at the moment, which is pretty nice to see. Now, obviously, this is an indicator that I have put into my algorithm to actually buy the bottoms and sell the tops. We did actually get quite close to. Well, no, actually, we didn't. We didn't actually get anywhere close to selling a top. But yeah, that's just one piece of data to take a look at. Now, I believe that's everything to do with Hyperliquid. I guess we'll take a look at the rest of this data. I'll get to that later. So taking a look at Velo. Velo's actually kind of interesting, and my kind of methodology of looking at funding throughout here is if you actually zoom in like a 4-hour time frame, and if you look at funding and open interest, you can actually see that when we kind of reach this bottom over here, we had a bit of negative funding coming in, which basically would represent shorts piling in. And as that happened, we obviously had open interest going up, proving to us that those orders really were coming in. And then ever really since this rally up, open interest has just been down, which is telling me probably these shorts probably got squeezed out, and they are continuing to being squeezed out. However, I also think we are getting a bit of longs also closing at the same time, right? Because as you can see, when price did begin to start going up, we also had like this big pump in open interest, which was there, which surprisingly around the same time was also when funding on the positive side was also going quite long. And then ever since us going like this, open interest has just been going down, like I've said. Now, in my opinion, I think this is indicative of that people are in kind of smart traders and kind of dumb traders at the same time are basically betting on price going lower, like down here. But the thing is, I think them doing that is the exact reason why it won't go lower, right? I'm going to explain what I mean, right, as we go through the rest of the data, okay? Because this is like at a very interesting point that we are in at the market. Now, taking a look at a bit of other data, this market is currently being led by futures, which is kind of bad to see. You don't really want to see that. And funding on here is basically the same as we just saw. Now, taking a look at the broad open interest here, so like the more longer term open interest, because we just took a look at open interest on like today's time frame. This is like the open interest across like multi years. We can actually see off just how much it's actually gone down, and I think this is indicative of that a lot of traders have decided to leave the market. They've obviously gotten liquidated, so on and so forth. So this is just another great bottom signal that I would really suggest looking at. Taking a look at CVD of the amount of like orders coming in, we can actually see that we are currently getting a lot of buy orders, definitely across the large traders, which are 10 million to infinity. In terms of 1 to 10 million, they're kind of struggling at the moment. They're not really doing anything, which is a bit worrying. But when I show you the rest of this data, you'll kind of see what I mean by how it actually makes sense that it's actually the 10 million to infinity buying, and why it's only them that actually matter buying at the moment. So take a look at liquidation maps, and this is what I mean by how day traders anticipating price going lower is the exact reason why I think price will actually end up going higher. Is if you actually look on like the 1 week, you will actually see that we do actually have a bit of liquidations below current price. Well, actually, on this one we have liquidations above current price. I think it's also the same for the 1 month. Yeah, we have a bit above current price, but then they start building up below, and then we believe going 6 month. 6 month. Yeah, but kind of the same thing, but this time it's all the way up here. But now the liquidations really begin to start opening up on the downside. So, in my opinion, this is what I think traders are anticipating. Price wanting to go lower, right? So they're betting on the market going down, right? But instead of like shorting the market as they would usually do, they're not shorting. They're just selling their positions, right? Because if these traders were shorting the market, right, we would see this turn red. But they're not, right? I just personally think they are just closing their positions, waiting for the market to do something like this, and wanting to buy here, right? Which I think is really interesting because I think that's the kind of fuel that would need us to send price higher, because then that would cause a bunch of chasing into the market to basically send us up higher, which I think actually makes a lot of sense for that to happen. And matter of fact, I have seen that happen plenty of times before. So yeah. Anyway, take a look at the rest of the data too. Max Pain. It's very skewed, but overall it still looks bullish to the upside. That's Durbis. Let's take a look at Binance. Basically, same story. Now this is the interesting part. This is actually the real interesting part of why I actually think of what I just said. Traders betting on the market going down is the exact reason why we are actually going to go up. Because if you actually look on the bids and asks, look at how much bids are currently piling into Bitcoin right now. Right? That right there, that bid right there is 1.3 is 1.3k Bitcoin, which let's just do the maths here, right? 1,300 times 64209. That's 83 million. That's insane. So that's what I mean by, if you look at the CVD, yes, don't get me wrong, we only have like the big whales, and the like whales aren't accumulating. I think that's indicative of that big whales up a lot higher. So they're just currently just buying the living fuck out it here. So yeah, like this is why I'm so tempted to take a long on Bitcoin. I cannot lie. Obviously, it would be zero leverage, and it would just be like a trend trade. Yeah, I started now because we're really crashing. Like, fuck. Um, Now, taking a look at these cross-sectional maps, it's basically the same thing as the liquidation heat maps. It's basically the same thing. Again, within these liquidation maps, you want to look within these cross-sectional maps. You want to look for like nice bell curves, right? Because that's basically where it would indicate price to really attract to go, compared to it being all like clumpy like it is over here. Like it takes a lot for Bitcoin to get like through all this, right? So like for example, we have it over here where it's saying that we have long liquidation at 57,000, right? It's basically telling us that price is going to go down to 57,000. But for price to go down through that liquidation, it needs to get through, first of all, it has to get through this, which is clean, but then it has to get through this load of clumpy, messy liquidations. Then it has to get through that, which is clean. Then it has to get through that, which is clumpy. Then it has to get through all this that's clumpy, and then all that. You know, you really want to focus on just the nice bell curve liquidations. And if you actually take a look at the long liquidation side, so that would mean price is going to go down. We actually it does actually look a bit messy. Whilst if you actually look on the short side, which is basically saying price will go up, it's actually a lot more cleaner, which is why I actually do believe it would be very realistic for us to see price actually rising higher. And another great example of this is actually taking a look at the more higher time frame liquidation maps, where this to me just looks very clumpy and a big mess. Now, don't get me wrong, I do think price will go lower, and I do actually think we will probably take out these liquidations in due time, but I just think we'll probably end up going higher first, which again, if you look at the upside of the liquidations, they do actually look a lot more cleaner as they do to the downside. So yeah, that's a quite interesting point. Taking a look at a bit more data over here, bids and asks. We're currently having a bit of perpetual futures bids coming in, whilst the spot is not really doing that much. But again, I say that, but you zoom in on like these on a shorter time frame, and you can actually see that these bids are actually piling in. If I should change that to dollars, make that a bit easier. Yeah, you can actually see that a lot of bids are currently being filled here, which is really good to see. Now, take a look at the rest of on-chain data. It looks like we are currently looks like the market's coming into profit for the first time in a while, which is why I think at the moment with price we are which is why in my opinion I think we are seeing price come up like this. And don't get me wrong, yes, we are having a lot of whales buying here, but at the same time I think we are having a lot of bag holders who have probably like bought here, basically sell as they come into like break even, right? So yeah, that's kind of interesting to see. Take a look at this other piece of data. This is the accumulation, and it does actually look like it is rising again. We had a lot of buying happen across here, so I actually do think that we are probably on the right side of the trade here, because we are, again, it's just more confluence of whales buying. And take a look at the retail dumb side. They are just distributing, which is great to see. Now taking a look at a few bottom signals. We've got nothing here. I'm just going to try and find a few on here, if I can find any. Supply and profit. This stuff is really slow at loading. Yeah, I think, no, it wasn't that. Where was it? I saw a piece of data that did indicate a bottom. Yeah, so you can see over here, we do actually have this one indicator bottom, which is block count, which if you look at the backtest for it, has worked pretty well for a dollar cost averaging strategy for buying Bitcoin. This looks like a trend indicator, currently telling us to stay short. This worked fucking horribly throughout Bitcoin's last cycle, but I kind of guess it is good for when you do want to capture these big, massive momentum moves. Sharp ratio, this is the one I wanted to take a look at. Pretty good for getting decent entries to be dollar cost averaging into the market. But yeah, anyway, that's all the kind of um, bottom signals I can really find. Now, this isn't actually something I actually said, but I've been taking a look over Twitter recently. Um, that's just someone I follow. It's not actually a post here. It's actually the amount of sentiment I've been seeing in the market of everyone basically now flipping long instead of short. So like a quite big name in this all was this guy called Dr. Profit, right? Where basically he decided to call the top of the bull market back when it was at 120,000, and he obviously shorted it all the way down here. Now, what's interesting is he's flipped bullish now, which is really interesting, and he's actually closed all of his positions, as you can see over here, where he's just been, I can definitely see the guy is definitely a good trader, but it's just it's just very worrying to me because he's a very big voice. He's got 500,000 followers, and now he's deciding to say, "Oh yeah, let's all go bullish now." And then you go on price and you check the funding rate, and it's slowly beginning to creep up to the upside. So again, like the last thing you really want to see is price going down, right? And then funding rate rising, because that just proves that people are trying to long the bottom, and then that just causes price to go down even further. So I will be keeping a close eye on this overall sentiment of the market, but overall that's not very a good thing to see. Now, looking at check on chain models, so funding rates, basically same story, pretty elevated. Now taking a look at it at a adjusted basis, we can actually see that it is beginning to climb up a bit, but it is still negative, so that's kind of interesting to see. Choppiness index, which is a really good trend following indicator, it is currently telling us that we are primed for a trend. Which way that trend is unclear. How this indicator basically works is whenever you see either the 1 day, 1 week, or 1 month beginning to climb up to the top end and then beginning to fall down, it basically indicates a trend. It doesn't say which way the trend will be, if it's either up or down. It just says the market will trend. So that's something that I am also keeping a close eye on. But yeah, that's kind of a bit worrying. I would want to say price is going to trend up just through the amount of bids that we've had, but again, it's kind of hard to tell really. Taking a look at futures versus spot quadrant, we can actually see that it is currently in a leveraged rally, which is not what you want to see at all. So great, but this could mean that we could also be relieving to the upside. So yeah, a bit worrying on that one. This is a bottom signal indicator that I found. It kind of spat out a very light, like very, very light buy signal down here. The last kind of real signal we got was at the bottom of the 2021 or the 2022 bear market, where I kind of guess what you really want to see is like green and just all the colors, and even when you get this low, this cycle low signal. So yeah, but of course take all these indicators with a grain of salt, but obviously they are good to be looking at if they are spitting out a signal at the time. Net realized profit and loss, no, net unrealized profit and loss, sorry. So yeah, we are still a fair bit off from like the Pico bottom area, which would basically be below this zero line over here. So I will be keeping an eye out on this, because this indicator has been historically really good for buying like the actual like Pico bottoms, if you would. So yeah, that's that. Short-term holder MVRV momentum does look like we are currently in a positive momentum rally at the moment, but of course, but this could change within an instant. So keeping an eye on that one. Short-term holder realized profit and loss. It looks like, yep, everyone is coming into profit at the moment. Matter of fact, I just want to refresh this because, no, it's basically the same thing. So yeah, everyone is currently coming into profit. And then finally, short-term holder MVRV. We are not too far off from coming above this midline of the MVRV, which basically what that represents is when price gets above this line over here, it indicates a medium-term uptrend. So yeah, we're getting very, very close to that, which would be kind of cool to see. And also, this can be used as a bottom buying indicator, where whenever price goes below this blue line, this -1 MVRV standard deviation, you can basically like buy at these zones, and it's overall in the medium term, it's kind of good to be trading it via that. You can even just see if you were just using it throughout this bear market where price was only going down, you could have bought here and then just sold back at the mean. Bought here, sold at the mean, 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 right? Like it's a really cool indicator. I highly recommend everyone to take a look at it. And finally, we're just taking a look at Hyperdash here, which is like what are the smart money and dumb money thinking at the moment. So at the moment, we're in a position where you don't really want to see this, where it looks like the extremely profitable cohort are actually getting slightly bearish now. So they were actually just overall bearish, but now they're coming back up to the long side, which is really nice to see. If you basically want to wait until they get above like 50%, but overall they work as a really good long-term trend indicator if you do want to be following them. But yeah, take a look at very profitable. Looks like they've turned neutral, which is very strange. They were actually bearish on Hyperliquids yesterday, but now they've turned neutral, and they're bullish on Bitcoin, bearish on the stock market and oil. And then take a look at these absolute retards. They're bullish on everything, bearish on the S&P. Fun to see. Yeah. So you really want to see this in the opposite, where these guys are bearish, these two are, well, these three are bullish, these three are bearish, which would indicate higher prices. And finally, ending off with a bit of news, Michael Saylor has decided to increase his USD reserves by 225 million. I actually spoke to a guy a while ago, and he basically said that he's looking at the market and he's just wondering of who the sacrificial lamb will be for this cycle. So what he basically meant by that is every single cycle, every single 4-year cycle, if you believe in it, it's always had like what's known as the sacrificial lamb. So like, for example, within this cycle, this crash over here was caused by FTX. And then we had a few others, I believe there might have been one throughout here, but I wasn't in crypto at that time, so I don't really know. That's kind of the point that he's making, that Michael Saylor could be the sacrificial lamb. So on the basis of things, it could look like that we are currently at a bottom, and we could do something like this, but then Michael Saylor could get liquidated, which would then just send us down like this, which would be very, very painful. But of course, that's why I've built the investing algorithm, and that's what I just use to manage all my positions. Now, I don't think there's much else to really talk about. Yeah, there really isn't anything else other. That's great to see, right on my feed. Oh dear, I'm gonna get demonetized for that now. Oh well. Right. Anyway, guys, that's all. I'll see you in the next video when I make it. All right, guys. See you later.